Hello everybody, my name is Alesh Eisner and welcome to the Canadian Money Talk, the channel about Canadian investing and personal finance. Please like and subscribe. I record 2 videos per week, so make sure you ring the notification bell to get notified each time one comes out. This is my thoughts on market happenings for the week ending March 18, 2022. Looking at the indexes for the week, the TSX, S&P 500, NASDAQ, Dow Jones, Russell 2000, and oil were all up for the week, although oil by a tiny amount. The TSX hit a new all-time high intraday. The inverted yield curve continues to be a threat as the short-term interest rates rise, and because of the heavy bond buying, long-term rates go down. This could be a self-fulfilling prophecy as far as the recession is concerned, because banks have less incentive to lend. They get their money on the short end of the curve in savings accounts and lend it on the long end of the curve for the fixed rate mortgages. And if there isn't enough of a profit margin there, they will not loan the money, and the economy will slow down. Inflation is the primary worry for economists and central banks because the economy is strong on both sides of the border. U.S. weekly jobless claims came in better than expected on Thursday. This is a positive for the economy. The Canadian inflation is the highest in 3 decades, hitting 5.7% year over year for February. The US Fed raised interest rates by 1/4% to no one's surprise. It was well telegraphed on Wednesday, and the Dow Jones jumped 500 points in a relief rally after the first rate hike happened since 2018, affecting variable interest rates. The US Fed could start selling off US government bonds as of next meeting also, affecting the fixed rate mortgages. Both US Fed and Canadian Central Bank could raise up to 6 times during the rest of the year. Jay Powell said as much, and the markets are pricing it in. In world news, Russia will sell its metals, oil, and gas somewhere else in the world, so the sanctions may not be working as well as we think. India is negotiating to get more of its oil from Russia, at a discount, of course. 50 million people are affected by the new Omicron strain in China, and Chinese stocks sold off on Tuesday, and the Omicron is making supply issues worse as well. Oil was selling off early in the week, partly because of an expected slowdown in China due to this quote-unquote stealth Omicron. Now, Chinese stocks took a beating early in the week due to investors reassessing the dual-listed companies after the US SEC was going to force delisting in 2024 of Chinese ADR stocks that don't comply with information requirements and audits. Now, Chinese stocks reversed on Wednesday, with Tencent, Baidu, and Alibaba up 30% in one day after the Chinese government pledged market support. Chinese indexes were up 6% on Wednesday because the Chinese government said they and the Chinese companies will cooperate with the SEC and the US auditors to satisfy the disclosure needs. The government also promised to widen access to capital markets and continue to stimulate the economy in China. The market overall had a great Wednesday and a good Thursday. Stocks extended their gains on Thursday after Russia reportedly made a $117 million bond payment, thereby avoiding default. In other miscellaneous news, oil companies aren't putting cash into capital expenditures anymore, and so they have more money for share buybacks and dividends. So owners of oil companies in Canada can expect some juicy dividends and perhaps share buybacks. Next week, the earning reports continue on both sides of the border, but the big names had gone already. Tencent reports on Wednesday and NEO on Thursday. That is the news for the week ending March 18, 2022. If you have any requests on what you would like me to cover in future videos, please put that into the comment section. Please like, subscribe, ring the notification bell, and may you have a profitable day.